let's have a commodities conversation right now with Otavio Costa. He's joining us from Denver, Colorado. Otavio is a portfolio manager at hedge fund Crest Capital. It's good to have you on the show. Good morning to you.
Good morning. Thanks for having me.
It's good. Thank you very much. So what were the main drivers for the commodities market this week, in particular, the mining stocks?
Well, the mining stocks and gold and silver, in my view, have been sort of in a consolidation mode, not just for this week, for the last few days, really. Gold and silver are basically flat for the week. I think they're getting ready for another big move to the upside, in my view. This week, we haven't seen much. I mean, the Fed minutes didn't show much of a change. We've seen the balance sheet change a little bit in terms of the Fed's balance sheet. It was close to $16 billion, an increase in QE last week. But it's still, and overall, I think was somewhere close to $60 billion at the Federal Reserve balance sheet increase as well. That's all positive for commodities. But I think the most symbolic thing that happened over the week was certainly Warren Buffett's purchase of a gold miner. I think that was certainly something that caught a lot of attention for other investors that are not warming up yet to the mining sector. I think there's clearly a lack of opportunities in the equity markets overall. And when you look at the S&P 500 earnings yield in real terms, in other words, adjusting for inflation, you can clearly see that we're now at a decade low. And at times like those, usually you see gold outperforming equities overall. So I think this is just the beginning of a bigger move for miners and precious metals in general.
So when you look at the manufacturing data from China, you look at economic data, broadly speaking, from China, as we saw today, the Eurozone manufacturing data for Germany, for France, and others in the UK. What does this say about the demand for the global supply chain when it comes to metals, if we will really see the economy coming back on stream with the lockdown easings being done? French President Emmanuel Macron says there will be no total lockdown any longer for the French economy or in Europe.
Look, on the demand side for metals in general, it's hard to quantify in terms of what's happening from a bigger sense of large central banks in the world, and the PBOC being one of them. I think there's so many drivers for the demand side. Obviously, I think the supply will probably remain constrained for a long time, given the lack of capital spending in this whole industry of the mining industry. And so the lack of discoveries that we see in gold and silver across the globe. So I think that supply side is well covered in terms of being constrained for a long time. The demand side has been surging for so many reasons. There's so many drivers nowadays for gold. I think one major one certainly has been the negative interest rates that we're seeing recently. I think that if you look back in the 70s, we can still get down to -5%, -6% on negative yields across here in the U.S. I think there's a mindset shift happening right now in terms of precious metals perhaps becoming more of a position for growth for investors in general rather than a defensive asset. So I think that's happening as well. So the demand will probably remain strong going forward, given so many other issues with low yields, extreme debt, extreme valuations across a lot of assets. And there's not a lot of alternative for investments in terms of large allocators. They're probably going to be looking into gold and silver and miners as an opportunity. I think those are going to be the first leaders before other commodities catch up to gold and silver.
Otavio, this is quite an unbelievable period where we see earnings from oil giants around the world nosediving while mining resources companies are making heavy monies. Goldfield, Anglo Gold Ashanti, Impala Platinum, and the rest of them. So do you think this rally in prices will keep the mining stocks and their indices still really in this very bullish position into Q4?
Yes, I think this is only the beginning. When you look at miners, gold and silver miners relative to global stocks, we're still near historical lows. I think that there's so many fundamental reasons to be long those names in general. There's very low dilution, equity dilution happening historically now. I think, when we look at capex, it's still diverging from the metal prices. In other words, metal prices have been rising, but capex has not been rising, which again, it gives you another reason about, I think companies are reluctant to spend capital in general right now. And I think perhaps a lot of that has to do with the bear market we've been on precious metals since 2011 that now is changing. And so I think there's a lot of strong fundamental growth that will probably sustainably continue in the following months. And when you look at across the equity markets among sectors, there's not real growth at all happening. And so a lot of investors will probably be going to miners in order to find that. And I think miners will become the new growth stocks. Which is kind of crazy to think about it. But there's a misallocation of capital in general in commodities, not just gold, not just silver. It's happening in oil, in copper, and almost everything. So there's not a lot of enough investments happening. And a lot of that actually is, unfortunately, in the nature of commodities and how they work, that will have an impact in 3, 4, 5 years from now. So this demand that is being driven with a lack of supply is certainly, misallocated, and it will probably drive prices of metals much higher, in my view. When you look at gold and silver relative to money supply, for instance, it still is, especially silver, essentially at all-time lows. So I think there's a lot of room for growth. And if that happens, I think miners are poised to go much higher as well.
So with the good times and very bullish time going on with metals, is it a good time, therefore, for countries such as Nigeria and others to invest and to get into the solid metals market, to invest in geophysical survey, to go into exploration or extractive industry? Is it a good time to do that?
Yes, I think it's a great time to do that. I think a lot of any country, any property that is sitting on a large gold and silver deposit would be worth a lot of money in the following years. There is, as I said, there's a lack of discoveries of gold and silver. Therefore, a lot of the large miners will be bidding up a lot of the small companies that are sitting on very prolific projects. At Crest Capital, we've been looking for those all over the world, in Peru, Bolivia, Mexico, some places in Africa. So yes, I think that that's a great timing for a lot of governments and countries to be looking at investments in that part of the world. Commodities have done nothing but gone lower for the last decade. And I think that's about to change. Usually what we saw in the last decade, we're probably not going to see the same in the following decade. And so I think commodities will probably posing a lot of opportunities here for investors in general. And so there's not a strong need for a lot of inflows of capital to change the whole industry, to change the whole space. So I think just a small portion of capital will make a significant change, and a lot of people will start seeing with different eyes this whole space of the market. Especially at a time, as I said, when equity markets are extremely overvalued. You look at housing markets is almost all over the world. They're extremely overvalued as well. So there are not a lot of places, corporate bonds. You have government bonds yielding negative today. So what is your alternative? Your alternative is probably gold. That's why we're big proponents of buy gold and sell stocks idea. I think that will continue to drive this whole market higher in terms of metals. And it'll probably have, miners go in the same direction.
Otavio, you don't think metal prices are overvalued?
No, matter of fact, I think it's quite the opposite. And I think we're about to see a significant change in metal prices given the amount of monetary stimulus that we're seeing. It's important to remember that the government here in the U.S. and all across the globe, we're facing a debt dilemma. Here in the U.S., for instance, about 70% of the Treasury issuance that we saw in the past year are all going to mature in 12 months, which means if you calculate it, somewhere close to $8.5 trillion of Treasuries will be maturing by the end of 2021. The U.S. government is not in a situation where they can pay off their debt. So this debt is going to have to be rolled. as it's likely to be rolled, I think that the Federal Reserve is going to be one of the largest buyers of that. In order to do that, we're going to see a lot more money printing to also fund fiscal stimulus. So I think this is all, a big inflection point for metal prices. Instead of a lot of people are actually, there's a survey that came out from Goldman Sachs looking at amount of investors that actually look at gold and are seeing gold prices extremely overvalued. So the sentiment actually, believe it or not, is a little pessimistic on metals.
If I'm a central bank in Africa now, Angola, Nigeria, elsewhere, Mozambique, I should be increasing my gold reserves.
Absolutely, I think you have, especially if you're smart enough that you're able to print money and buy gold, then it's perfect. But it's not a lot of economies are able to do that.
What an idea! Print money and buy gold because the reserves will give you the cash back, and again, it's going to give you in foreign currency. If you print naira to buy gold, the return on that is going to be in dollar terms. Very smart way to think as a trader and a hedge fund manager. Thank you so much, Otavio Costa at Crest Capital in Denver, Colorado. It's been a very nice time speaking with you today and bringing the commodities markets to a close where a number of countries on the continent are angling to get into the world of gold. Of course, Nigeria has got its first 500 million naira as the central bank purchased some gold. So we're going to hit the ground running and do more.